The US dollar is mixed versus the major currency pairs to start the New York session. In this video, I'll take a look at three of those major currency pairs, the euro versus US dollar, dollar versus yen, and sterling versus US dollar from a technical perspective. So let's get started. Taking a look at the euro versus US dollar on the hourly chart, recall from yesterday the price found support buyers, right here to start the move to the upside, and then right here, and then right here, and later in the day we found another time where the price found support. So the last two trading days we found four separate times where the price found support against the 100-hour moving average, and then later in the day the price high off of this low came up to the 200-hour moving average. So we started the day between the 200-hour moving average on the top side, the 100-hour moving average on the downside, and lo and behold, the price moved down to test the rising 100-hour moving average this time and found support buyers again. So five separate times the price found support against the 100-hour moving average. Put that away in your memory box there, because if we break below this level, it should open the door for further selling pressure. That's what you'd expect. This time the price moved back higher, and after testing the 200-hour moving average for the second time in a row, we finally broke through, and now that's helped to push the price higher in the euro versus US dollar. Get rid of all those hours so you can see. So this is a break point. We're above the 200-hour moving average. Moved also above the 38.2% retracement of the move down from this high price from September to the low price, most recent low price. So that was a positive as well. But we aren't seeing any momentum to the upside. What we can say, however, is that after all this work at the 200-hour moving average, 100-hour moving average, the close support is now the 200-hour moving average. As long as we can stay above that level, the buyers can take the price higher over time. We will see if it can hold support. If it doesn't, and we move back below the 100-hour moving average, you know what to do there. We look for increased momentum to the downside. So the buyers are more in control. We'll see if they can push the price higher. If they do, then we'll look toward the 50% retracement, look toward this swing area up through here, where we had a number of different swing lows and highs going back in time that define that area too. So that goes up to 1.1788. Let's take a look at the dollar versus yen next, and again we'll focus on the hourly chart. This pair has been down for 1, 2, 3. This is the fourth day that the pair has been to the that is lower. We did come down to the 100-day moving average yesterday, and the chart moved to the downside, and also this low of the swing area found early buyers against the 100-day moving average, pushed higher but stayed below this area right through here, which was a support and resistance level before breaking to the downside in trading yesterday. Staying below that level kept the sellers more in control and pushed back down. The problem is we continue to find support down here against the low of the swing area and also the rising 100-day moving average. Ultimately, we were going to be, if the sellers are going to take more control, we need to get below the 146.48 level. Right now, buyers are leaning against that level in hopes that we get another rebound back to the upside and maybe look to sell again up here. That's to be determined, of course. We never know the future, but if you can define your risk and limit your risk against the 100-day moving average, you'll risk this amount to make this amount at times, and that's what seems what traders are doing now between this support and this resistance up here, the dollar versus yen. There were some BOJ comments that perhaps the BOJ would look to tighten rates sooner rather than later, and that is helping to keep the yen supported, the dollar yen onto the downside. Also, there's that the quote-unquote flight into the relative safety of the yen as a result of the issues within the U.S. With their budget and the government shutdown that is helping to pressure that pair. Finally, let's look at the sterling versus U.S. dollar, a up and down trading day. The up took the price back above the 100-day moving average. That's this blue line right here, but could not sustain the momentum. Maybe I'll zoom out of here, make it a little bigger. There we go. You can see the break above the 100-day moving average and the move back to the downside. That move back to the downside came back to what is becoming a familiar area for buyers, at least, and maybe sellers as well, because they're buying against it. But this area right through here, which was ceiling, and then moved above it here in up and down trading. Use that level as a floor through here. So ceiling and now a floor at the 1.34672 level. If we break below that level, and get below the 100 and 200 hour moving average, it would open the door for further selling. Conversely, we'll still continue to watch the 100-day moving average. You can't ignore it. When the price moves above it, you should look for increased momentum, like we did here and sort of did here. But if we do break above the 100-day moving average, we'd have to look toward the 50% retracement of this move to the downside at the 1.35244 level. So there you have it. A look at the three major currency pairs that kickstart your day. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.